Uber, the latest mega tech company to get the memo. Start making money. Coming up here on The Job. Hi folks, Alex Klingelhoeffer here with Exencial Wealth Advisors. It is 8:20 here in the middle part of the country on Monday. It is May 9th, 2022. Here's your morning jog around the economic headlines of the world. I want to start off with Uber on the left coast, now saying they are slowing down hiring considerably, looking to cut costs and finally start making some money. Of course, last week Uber came out with a dismal earnings report, including losing like $8 billion in investments in one quarter. That hurts enterprise value considerably. On a go-forward basis, are they going to be like Meta and start producing tons of cash to reassure shareholders that yes, indeed, we have a viable business that can go on without very low interest rates and without outside support? We can actually have free cash flow. What a nice picture. Or will they be like rival Lyft and continue to spend a ton of money on promotion and try to grab market share? It is a new era on Wall Street, or at least a rotation into companies that actually make dollars. That's often what you see when you see equity markets retract a little bit, like we've got here. Rivian, not doing so hot. Again, talking about EV startups, 25,000 cars is their goal here this year. Ford's going to sell off a huge block. JP Morgan said they were going to sell off a huge block over the weekend as well. Listen, Rivian continues to make really cool vehicles. I actually kind of like their truck. It's neat. If you don't have a pathway to free cash flow in this market, you're going to get punished. Financing costs are going higher. CEOs really do need to be very aware of this and taking stock of how they're getting their funding. Last but not least, or we get you off to a nice Monday. Remember when folks were evangelizing about Bitcoin as an inflation hedge? Well, inflation's up to 8%, Bitcoin's down. Remember when folks were being a store of value? Well, it's down almost 50% from its all-time high. Remember when folks were talking about Bitcoin as a hedge against tech volatility? Put your money into a safe haven asset. Well, as it turns out, none of those three things have been proven when put into a market context. It's not an inflation hedge. Inflation goes up, Bitcoin goes down. It's not an equity hedge. It really trades like a meme stock, unlike, say Procter & Gamble, right? It should be steady, right? Not making much more of it. And it's not generating any cash flows. So I say, is it great technology? Of course it is. It's really cool. Things will be built on the back of blockchain. But from an investment case, it still remains a speculative asset that folks who have money like to send to one another. And that's fine. Art does the same thing. It's a really great business to be in if you're helping facilitate the transactions. Otherwise, keep it a small and reasonable part of your overall portfolio. If you want some additional information throughout the week, feel free to find me on the internet. I am out there. Until then, hope you, your family, have a really good rest of your Monday afternoon. I am out.